Hey everybody, what's going on? Welcome back to our latest Trade to Black podcast. I'm your host, Shad Dales. Today we're digging into one of the most important and complicated markets in the cannabis industry. California. It's the largest cannabis economy in the U.S., a bellwether for national trends, and right now, it's sending some mixed signals. Is California's legal cannabis industry in trouble, or is it simply just adjusting to new retail reality? With that, let's break it down. So, according to the California Department of Tax and Free Administration, legal marijuana stores reported $1.08 billion in sales from January through March. That's the lowest first quarter number since 2020, and it's down from $1.2 billion over the same period last year. But here's the twist. Unit sales actually increased slightly. Metrics track and trace data shows 57.4 million products sold in Q1 2025, up 0.92% from 56.9 million in Q1 2024. So what's happening? People are still buying cannabis, they're just spending less. So as economic pressures mount, from inflation to shaky markets to fears over new trade wars, consumer behavior is shifting. Retailers are reporting a move from premium ounces and towards more affordable options like $5 pre-rolls. Wesley Hine from Mammoth Distribution, he said it best, quote, "People aren't saying I won't get rich, they're just buying a little less." So this is classic recession behavior. Cannabis is still in the basket, but it's being downgraded. And while that helps unit counts, it hurts margin, and it's a tough hit on already struggling operators. And another problem, the industry is still grappling with a COVID hangover. Sales spiked during the pandemic when dispensaries were labeled as essential and stimulus cash flooded into the market. That led to unrealistic growth projections, bloated company valuations, and now a painful correction. As our good friend Hirsch Jane from Ananda Strategy, he put it, quote, "Units sold are stable is a bit of a cop-out. It sidesteps the real question of market health," end quote. And let's face it, the pain might not be over. Starting July 1st, the state's excise tax is set to increase, which could put more consumers into the illicit market. That's a serious concern when legal operators are already being outpriced and overregulated. Unless something changes, this tax hike could deepen the divide between legal businesses and the unregulated market, just when the state needs more support, not less. Come on, California. But despite all this, let's not lose perspective. California still leads the nation in cannabis sales with $4.6 billion in annual revenue. The state has the largest consumer base, the biggest concentration of cannabis brands, and the most mature supply chain. And there are signs of resilience. Consumer confidence in California ticked up slightly in May after Donald Trump backed away from new tariffs. That easing of trade fears could mean a bump in Q2 sales, especially with the 420 boost now in the books. So really, here's what this means for investors. California is not collapsing, it's correcting. Expect more price compression, M&A, and really business failures, especially among over-leveraged players. But also expect more value-oriented brands and operational discipline as companies adapt to the new market conditions. The winners in California, they won't be the biggest, they'll be the smartest. Operators who know how to compete in a value-driven environment, manage taxes, and build brand loyalty will come out stronger on the other side. So really, the California market, it's in the middle of a retail reset. It's not all bad, but it's definitely not easy. And if you're investing in cannabis right now, this is the market to watch. So with that, that's a wrap for today. And I want to know, how much do you follow California, and how much of the success in that state really has an effect on the overall industry? Let us know. Leave your comments below. Keep this conversation going. As usual, we'd love to get your feedback. If you have time, give this video a like. Make sure to subscribe to our channel, because really right now, as I said before, only 20% of our audience that consumes our content is subscribed to our channel. So make sure to subscribe, people. Let's grow this community. That's it for today. And like I always say, stay open-minded, stay connected, and I'll see you next time at our latest Trade to Black podcast. I'm your host, Shad Dales, and thanks again for watching.